Let's review the New York session for Thursday. Obviously, always starting from the open and looking at a perspective of the range that price was trading in. Right at the open, obviously the 3-day look back since it's Thursday, we're looking at the weekly low, Monday's low. You can see that the range coming inside of Thursday on a three-day look back perspective had found the most accumulation inside 25% of this range, right? So this here, the wick of this order block was first PDA that I mentioned yesterday, and to have this level on your chart in case it gets revisited and seeing how price trades around it. And if we were to look at the previous range, I would see that price spent the most amount of time around 50% of the range, and there was an obvious fair value gap to the eye. Right now, the context in the moment was that, sorry, not in the moment, but as I was explaining yesterday inside the outlook going inside Thursday, was that I cannot qualify this as a high probable order block, as there was no shakeout, there was no liquidity grab, right? It was simply an inside bar, right? Whereas this one here, for example, has a manipulation phase, has a divergence with it, right? So clearly this is a shakeout and this is a reaccumulation phase. So PDA of importance for the day from the previous range not necessarily being, right, these down close candles, these small order blocks, but rather the obvious fair value gap that was located at 50% of the previous day's range, right? This fair value gap right here. So very important level for the day, and in case gets revisited, right, the important PDA inside of the 3-day look back range. So having seen that, let's go inside the 5-minute chart and let's look at the New York session. So at the open, large drop on some news, and price holds the fair value gap, right, 50% from the previous day. Comes back inside of it in Asia, trades tiny bit below it, reclaims the range, right, and builds a range around it, essentially coming inside of New York, right? So London revisits it, pre-market builds a range around it until eventually we open at 9:30. So a bit of a choppy opening range. You can see that 9:30 initially opens, takes out a short-term low, making a divergence at these levels with the S&P 500, delivers to the highs, and from there sees a retracement phase where then I believe yet another SMT is created below the opening range low, right? So this here, key SMT. Why? Because we're talking about an SMT with a new 4-hour power of 3 and has to do with the opening range, right? So the opening range itself always very high probable, and from these levels the market builds an accumulation of longs to deliver towards the drawn liquidity being the previous day's high. Right, then so if you got an opportunity to trade long inside of these levels, right, this was a good trade because this trade was backed up by a divergence with the opening range, and where that price came from, it came from, right, an accumulation phase holding the levels as support, right, from this is the fair value gap hourly BISI located at 50% of the previous day's range. So price was holding this bullish PDA coming inside the opening range, right, and then creating the divergence and expanding towards the highs. And so, right, so any long opportunity past 10 a.m., in my opinion, high probability, right? These are high probable longs until at least the drawn liquidity, right? From there, I mean, it could have continued. In this case, it ended up creating a reversal from these levels. the S&P 500 failing to trading above Tuesday's high, right, while Nasdaq makes a new high. So some kind of a three drives on a higher time frame perspective, and from there creates a shift in structure. And the shift in structure is, right, we can see the displacement here, price creating an order block, displacing the range, and leaving a fair value gap through the range. So if you weren't able to have a trading opportunity at these levels, right, this here made for a good shorting opportunity, because overall, right, we can see that the market left equal highs below the range. And right, and the difference as to why I would say, okay, why is this a high probable long, but why in here is this not a high probable long? Say when, right here we have a fake market structure shift, a fake change in state of delivery on the 5-minute. Well, the difference between the longs inside of this range and the longs inside of this range is that it is the drawn liquidity, right? At these levels, at this point in time, the drawn liquidity was still intact. And the difference here was that after having traded to the buy side liquidity, price failed, right? Price rejected and created an expansion phase, right? So great long opportunities, great short opportunities presented inside of this range. Price ended up taking all of these, right, all these equal lows inside of this range. And you can see the accumulation phases around the two PDAs of interest, right? This one here is the hourly fair value gap from the previous day, and this one here is the wick high of the bullish order block. Right, we can see the sensitivity to these levels, right? At first, price using it as support. Eventually, once the order flow shift, price displacing through it, revisiting it, expanding lower, right? Bodies holding 50% of the range, leaving wicks behind from the bullish order block, sends price back higher inside of the fair value gap, right? Price builds a range around it, right? Always accumulating around, right, the 50% level, very, very important level to the range, accumulating orders inside of it and closing the day right at the high of it. So not the easiest price action. Overall, decent day. I would call this a London close reversal profile, right? Because the most obvious move of the day, in my opinion, is this right here, right? And so and this happens as of 11:30, right? So because of that, I consider this to be a London close reversal profile, right? And it's a bit the same idea as to what happened yesterday, where the market trades inside sell side pool, right? In this case being previous day's low, and then from there creates a PM reversal, right? PM reversal, and then from the expansion accumulates. So this is again a reminder why it's very important to have those key levels, right, from the previous day or from the 3-day look back range. As you can see, the sensitivity of price around them, and from the reaction around these levels, that's how you're able to create a narrative, right? Where did price come from? What time of day is it? What's my drawn liquidity? So very important factors to determine the probabilities of a trade.